Hello and welcome to Explain the Charts. Today is October 24th, 2025, and we are doing an in-depth analysis of Amazon, ticker symbol Amazon. It has been a fascinating week for the stock, filled with contradictory news and surprising price action that we need to unpack. The biggest headline was undoubtedly the massive Amazon Web Services, or AWS, outage that began on October 20th, impacting major platforms like Snapchat, Robinhood, and even Amazon's own services. Normally, you'd expect such a significant operational failure to hammer a stock, but that's not what happened here. Instead of falling, Amazon stock actually climbed higher on Monday and Tuesday, shrugging off what many saw as a major blow to AWS credibility. Analysts believe investors are laser-focused on Amazon's long-term growth story, particularly its role in the artificial intelligence boom, viewing the outage as a mere fleeting technical stumble. This resilience is a key theme we'll explore, as it shows where the market's priorities currently lie. However, not all news has been positive. Reports emerged of a potential major cloud deal between Google and Anthropic, a key AI partner for Amazon, which could pose a competitive threat. All of this is happening as we approach the next major catalyst for the stock, the third-quarter earnings report scheduled for October 30th. Wall Street will be watching one number above all others, AWS revenue growth, with many hoping to see it re-accelerate back to the 20% range to quell fears that it's losing ground to Microsoft and Google in the AI cloud race. Now, let's dive into the daily chart to see how this narrative is playing out in the price action. Looking at the bigger picture for 2025, we can see Amazon had a powerful run-up, hitting its 52-week high of $242.52 back in early February. Following that peak, the stock entered a significant correction, finding a bottom around the $161 level in April. Since that April low, the price has been in a choppy, grinding uptrend, making a series of higher highs and higher lows, which is technically bullish. However, it's been a bumpy ride, with several sharp pullbacks along the way. For instance, we saw a run towards $235 in early September, which was met with selling pressure that brought the stock back down. This established the $230 to $235 zone as a significant area of resistance to watch on any future rallies. More recently, the price has been consolidating, trading in a wide range. Before the outage news, the stock was hovering around the $213 mark. Now let's zoom in on the price action surrounding the AWS outage, starting from October 17th. On Friday, October 17th, the session before the outage began, Amazon closed at $213.04. Then on Monday, October 20th, despite the outage dominating headlines, the stock gapped up and closed positive at $216.48. The buying continued on Tuesday, with the stock pushing all the way up to a high of $223.32 before closing at $222.03. This two-day surge of over 4% directly contradicts what you'd expect from such negative news, confirming the market's focus on the bigger picture. We did see a pullback on Wednesday, where the price fell to a low of $216.52, finding support near Monday's closing price. Yesterday, on Thursday, buyers stepped back in, pushing the price back up to close at $221.09. This price action has carved out a very clear short-term range for us to watch. Switching over to the one-hour chart gives us a clearer view of this week's trading range. The key resistance level is clearly defined by Tuesday's high, right around $223. Any move to the upside will need to convincingly break and hold above this level to signal a continuation of the rally. On the downside, the key support level is Wednesday's low around $216.50. This level is significant because it's where buyers showed up to halt the pullback. A break below $216.50 would be a bearish short-term signal, suggesting the recent rally has failed and we could retest the pre-outage levels around $213. For now, the stock is trading within this roughly $7 range between $216.50 and $223. Traders will be watching these boundaries closely for breakout or breakdown opportunities. Zooming in even further to the 15-minute chart for yesterday's session, October 23rd, we can analyze the intraday sentiment. The stock opened at $219 and saw an initial dip down to the session low of $218.18. This dip was quickly bought up, and the price rallied for most of the day, reaching a high of $221.30. It closed strong near the high of the day, which suggests that bullish momentum is carrying into today's session. For day traders, yesterday's high of $221.30 is the first minor resistance to watch. A break above that could signal a test of the week's high at $223. Conversely, yesterday's low of $218.18 acts as initial intraday support. Alright, let's switch back to the daily chart and recap everything for a clear path forward. The market is in a holding pattern ahead of the earnings report on October 30th, but we have some very distinct levels to guide us. Your key short-term resistance is the weekly high around $223. Above that, the next major target is the September high near $230 and ultimately the 52-week high above $242. Your key short-term support is this week's low at $216.50. If that level fails, look for a potential drop to the pre-outage price of $213, with a major psychological level of $200 below that. Now for some potential scenarios. I believe a bullish continuation has about a 60% probability in the short term. The market has clearly signaled it wants to look past the AWS outage and focus on AI and earnings. A break above $223, especially on good volume, would reinforce this and likely lead to a test of $230 before the earnings announcement. I would place the bearish scenario, a break below $216.50, at a 30% probability. This would likely be triggered by negative news about competition, like the Anthropic story gaining more traction or a broader market downturn. Finally, there's a 10% chance we simply chop sideways between $216 and $223 until earnings, as big money waits for the official numbers. The most important thing to look for is the earnings report on October 30th. Listen closely to the conference call for management's outlook on AWS growth and their strategy for capturing more of the AI market. That report will likely determine the direction for the next several months. That's all for our analysis of Amazon today. Thank you for watching Explain the Charts. Please remember, this video is for informational and educational purposes only and does not constitute financial advice. You should always conduct your own research and consult with a qualified financial professional before making any investment decisions. Trading stocks involves risk and you could lose money. If you found this breakdown helpful, please hit the like button, subscribe to the channel, and let us know in the comments what stock you'd like us to analyze next.